Global markets see rebound in sentiment after sharp declines related to concerns over the spread of the coronavirus. OPEC Joint Technical Committee begins coronavirus impact assessment meeting in Vienna, Austria. And United Nations Food and Agricultural Organization warns of food insecurity in the East Africa as locust swarms threaten more countries there. Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimezie Obi Iwago. We begin with intraday numbers. The Nigerian stock index was in the red at intraday, down 0.32%, making it the sole loser at the time. The JSE index in South Africa, however, gained heavily, 1.54%. Egypt was up 0.38%, and Kenya closed in the green on Monday. And major Gulf stock markets rose at intraday on the back of a rebound in oil prices and a string of positive corporate earnings and announcements, except Dubai. Saudi Arabia's index rose 0.32%, led by 0.7% gain at National Commercial Bank. In Qatar, the index was up 0.18% as the Gulf's largest lender, Qatar National Bank, rose 1.5%. Abu Dhabi's index was up 0.37%. However, Dubai came down 0.14%. And in Europe, markets traded higher in early traders. Sentiment improves and investors brush aside economic fears over the coronavirus outbreak. However, airlines have continued to extend flight suspensions to mainland China, and the latest to take this move is Lufthansa. Chelsea will speak more on this. Hello, Chelsea. Good afternoon. Well, Germany's Lufthansa has joined other global airlines in extending flight suspensions to mainland China. How hard will these cancellations hit the industry?
This could certainly be a big financial blow to the broader airline industry. There's, of course, a lot of airlines have over the past several years, made really big bets on Asia. Asia has been one of the fastest growing airline markets, in China in particular. It's been a huge source of growth for the global airline industry. So the fact that airlines are canceling flights, really some of the estimates are around 2,000 flights a day are being canceled because of the spread of coronavirus. That's certainly going to have an impact on carriers. You mentioned Lufthansa. Lufthansa is seen as one of the most exposed European airlines to the spread of coronavirus because they get about 7% of their capacity from China. So this is going to lead to about more than 50 flights cancellations a week for Lufthansa. And at this point, a lot of airlines really aren't sure how long this is going to span. So Lufthansa is canceling flights through the end of February, but some airlines have canceled flights through the end of March, through the end of April, and it's really unclear at this point how much further, how much longer this outbreak is going to last. So there is, of course, the risk that airlines have to cancel more and more flights going forward.
Still on the coronavirus impact, we've seen global oil market prices slid into a bear market yesterday, although has seen some rebounds today. And reports indicate the OPEC oil producers could deepen production cuts. What kind of economic impact could this have?
Well, the first question, of course, is will production cuts actually help stabilize the oil market? It's not clear at this point. The OPEC producers are discussing production cuts maybe in the 500,000 barrels a day to 1 million barrels a day range. China is already seeing a decline in demand of 3 million barrels a day. So it's not clear if even if OPEC does take steps to curb production, if that really will help put a floor under oil prices. But in terms of the economic impact, it's really going to depend on how much exposure the countries have to oil itself. So, of course, this could be very bad for Gulf nations, for oil exporters. Saudi Arabia, for example, is hugely dependent on oil revenues. So this would obviously be a big problem for a company or for a country like that. It could have a marginal positive impact on oil importers. So countries like Germany, for example, that import oil, this could help drivers. It could sort of help airlines a little bit if they're seeing lower jet fuel prices. But it of course is going to depend on how long this price decline lasts.
And in corporate news, electric vehicle maker Tesla is soaring with the stock almost doubling since the start of the year. Are investors worried the stock is becoming overvalued?
I think that's a definite concern. Tesla obviously is a hugely controversial company. There are a lot of people who have been saying it's overvalued for years now, but this huge run-up we've seen in the stock has definitely revived those conversations. By pretty much any conventional metric, Tesla is highly overvalued. But a lot of Tesla investors believe that they just shouldn't be held to the same standards as a conventional auto company. So a lot of investors see Tesla more as a Amazon, as a Facebook, as a sort of a game changer in the industry, and they really shouldn't have to play by the same rules in terms of financial accounting and things like that. There have been obviously improvements at Tesla. They posted 2 quarterly profits in a row. They're hitting production targets. So there has been a move towards more stability for Tesla. But I think there is still a lot of optimism and there's a lot of hope for the future that's really driving the market value right now.
Thank you for those updates. Enjoy the rest of the day. Meanwhile, the London FTSE 100 climbed 1.40% this morning to rise as it continues to rally after last week's coronavirus-related losses. The wider FTSE 250 climbed a similar amount. Juliana will tell us more. Hello, Juliana. Good afternoon. Well, let's get started on the market street with sterling and stocks intraday update. Are their stocks being impacted by their latest earnings?
Good afternoon, Chimeze. Well, as you said, the FTSE opened on triple-digit figures this morning at early trading. At intraday, the figures have slightly trimmed, but still seems to be quite good in equities and currencies. The all-share is up 1.12%. The FTSE 100 is up by 1.15%, and the FTSE 250 is up by 0.95%. In currencies, the pound is up on the dollar by 0.07%, up on the euro by 0.12%, and also up on the Japanese yen by 0.35%. Even as the coronavirus sentiment deepens, it seems as if the equities market, particularly in London, are kind of batting that away. Oil majors are doing really well on the FTSE. Brent crude is up by 36 cents per barrel, and that's as, of course, the OPEC meeting is going ahead in the background. So good day in London.
All right. What is the latest on UK's ban on the sale of new petrol, diesel and hybrid cars? Is the news getting traction?
It is, Chimmy. It's dominating headlines here in the UK. Prime Minister Boris Johnson, he was giving, he was launching COP26, the UN summit that will be taking place in Glasgow, which is in Scotland, the north of England, he was with Sir David Attenborough, who is the legendary filmmaker and historian. And during this speech, he took the opportunity to announce that the UK will be banning new cars that are petrol, diesel and even hybrid on their roads by 2035. It has shocked quite a lot of people. The government did say they did plan to ban petrol and diesel cars by 2040. They've pushed this forward by 5 years. And Boris Johnson even went further to say that if the transition period can be smoother, then he would like to see that a lot quicker. And this is really Boris Johnson putting forward his plans to make Britain a leader in cutting net zero emissions, having them to be zero by 2050. During his campaign, he also said that he wanted Britain to be at the forefront against the fight of this climate emergency. So it has shocked a couple of people. 2035 isn't a long time away. At the moment, in the UK, only 2% of cars on the road are electric vehicles. However, last year, the Society of Motor and Trading data, they did find that the sale of electric vehicles had increased by over 144%. So it's going to be a long way, and it'll be interesting to see what car makers will be saying about this, particularly in a time where many of them are dibbling and dabbling about whether or not to stay in Britain with manufacturing or to go to the continent because, of course, the post-Brexit situation here.
Now, an interesting report out there says some 50% of UK children of 10-year-old owned a smartphone in 2019. What else does this report reveal about the new world of online and viewing habits?
Well, Chimmy, the report was pretty short and sweet. Basically, what it revealed is that, there are children who their device of choice in this day and age is the mobile phone. They prefer that than going on laptops. They prefer that than going on desktops and even using PlayStation 2s and other gaming consoles. That 50% benchmark increases to about 75% when you are 12 years old. But look, it seems as if these kids, well, it doesn't seem as if these children are children who have been raised in an era where they don't know anything but the internet and they can't get enough of it. And parents are feeling forced to please their children to give them these phones. Why? Because sometimes if you don't have these phones and you're in the playground, these reports have found that these children get bullied and are peer pressured into stealing. So also as well, what the report reveals about the use of smartphones is, of course, as we all know, especially those of us who are parents, is that there are dangers with being in the internet. There are so many government policies that have been provided in the UK and passed through into legislation to try and make the internet more safe, but it is almost ungoverned. So as well as highlighting some of the benefits, like the Greta Thunberg effect, where children are able to be more active on social media and Twitter and start hashtags asking for change, there are some downsides. And even though parents are trusting their children more with the internet, they are being told to be more vigilant.
Sure, I agree with that. Caution should actually be the watchword there. Thank you for those updates, Juliana. In Asia, mainland Chinese stocks saw a partial recovery today after deep losses on Monday as investors weighed the potential economic impact of the ongoing coronavirus outbreak that has killed hundreds in China so far. Monday's plunge had left mainland Chinese index diving more than 7% by the market close. The Shanghai Composite was 1.34% higher at about 2,783 points, while the Shenzhen component jumped 3.1% to 10,089 points. The Shenzhen Composite added 1.84%. Hong Kong's Hang Seng Index was 1.28% higher as of its final hour of trading. Meanwhile, Hong Kong's Hospital Authority confirmed on Tuesday morning the first coronavirus-related death in the city, a 39-year-old male. In Japan, the Nikkei 225 closed 0.49%, while the Topix Index gained 0.69%. Meanwhile, shares in Australia saw gains on the day, with the S&P ASX 200 up 0.37%. And U.S. stock index futures were sharply higher in the morning as fears ease over an economic fallout from the coronavirus outbreak. At around 2:30 a.m. Eastern Time, Dow futures were up 178 points and indicated an implied positive open of more than 198 points, while futures on the S&P 500 and Nasdaq were also higher. Markets look set to continue the recovery after Friday's steep sell-off amid concerns over the fast-spreading virus. Atlanta Federal Reserve Bank President Raphael Bostic on Monday said his outlook for the U.S. economy was unmoved by the virus. Stateside results from the Iowa Democratic Caucus were delayed as the party revealed that a reporting issue had caused inconsistencies in the data. Earnings remain high on the agenda. ConocoPhillips, Sony, Ralph Lauren, Royal Caribbean are among those reporting before the bell. Chubb, Disney, Ford, and Chipotle will report after trading hours. U.S. Red Book data for February is due at 8:55 a.m. Eastern Time, while December factory orders are expected at 10 a.m. Eastern Time. We'll take a break, and when we return, we'll look at what's happening in the commodities market world. To stay with us. And the Joint Technical Committee of the Organization of Petroleum Exporting Countries and its allies begins a two-day meeting in Vienna to assess the impact of the coronavirus on crude oil demand. This comes as OPEC and non-member plan to cut their oil output further by 500,000 barrels per day due to the impact of coronavirus on oil demand. The technical panel is likely to make a recommendation on any further action to support the market. Meanwhile, OPEC and its allies, including Russia, known as OPEC Plus, are considering holding their ministerial meeting on February the 14th and 15th. That's earlier than the meeting initially set for March. And the United Nations Food and Agricultural Organization has warned that swarms of desert locusts could ravage more countries in Eastern Africa and threaten the livelihood of many more people. The swarms, first sighted in December, have already destroyed tens of thousands of hectares of farmland in Kenya, Somalia, and Ethiopia, threatening food supplies in the worst locust invasion in 70 years. There are also other countries at risk, especially South Sudan, Uganda, Eritrea. FAO says at least one locust swarm had already been seen in Eritrea and several had also been sighted in Oman and Yemen. Even before the locust invasion, some 11 million people in Ethiopia, Somalia and Kenya were experiencing food insecurity, and the swarms will worsen the situation. And on domestic commodities market, today our focus is on maize. Worldwide consumption of maize is more than 160 million tons, with Africa consuming 30% and sub-Saharan Africa 21%. Our Eastern and Southern Africa uses 85% of its production as food, while Africa as a whole uses 95% compared to other world regions that use most of its maize as animal feed. Well, let's look at this commodity and the price trend here in Nigeria. Tobiloba Ogunpolu, one of the research analysts with Financial Derivatives Company, joins us now. Hello, Toby. Good afternoon.
Good afternoon, Chimeze.
Well, according to Economist Intelligence Unit, world maize consumption has doubled in the past 2 decades, resulting in an average annual growth of 5%. Here in Nigeria, the price of maize increased by about 6.25% in the last 12 months. What would you say is responsible for the consistency between the domestic and global price trend?
Well, it is true that there is consistency between the global and domestic price trend, and that is due to the fact that we've seen that the demand for this commodity has been increasing. So, first of all, the factors that are affecting, that have been boosting the demand for maize are, one, we've seen that there has been increase in demand for animal protein. So we've seen that the animal feed industry has accounted for about 50% of maize production in the world. So this industry has really taken a whole lot of quota for production, and therefore this industry has been increasing, and the demand for the commodity has been increasing in this aspect too. And we know that corn is an essential ingredient for the production of animal feed. So secondly, we've also seen that there has been increase in the demand in the ethanol industry. So we know that corn ethanol is a biofuel that is used in this industry, and due to the use of biofuel, we've seen that it has reduced air pollution. So we've seen a lot of industry trying to demand more for this commodity in that aspect. So apart from that, we've also seen the increase in the consumption too, because we know that as the global population increases, the demand for the commodity also increases, and this has really affected, has also helped in the increase in the demand for the commodity, and this has really helped in the price increase. So we've seen that the price has increased over the decade, but it has more than doubled over the decade, and these factors are the factors that have been helping in the price.
All right, this price increase that we have seen in the past year, that's in 2019, it's coming at a time when average food inflation in 2019 stayed stubbornly above 14%, well, 13.73% currently. So what is responsible for the aberration? And is maize not affected by border closure or even the coronavirus?
Okay, so the weight of maize on the food basket is relatively small when compared to, when compared to rice, which accounts for about 8% of the food basket. So the increase in the price of maize cannot determine the trend, the increase in food inflation. And food inflation is currently about 13.73, like you mentioned. So the increase in the price does not correlate. So looking looking at the global front, we've seen that the outbreak of coronavirus has really affected the demand for the commodity. So China accounts for about 25% of global consumption, and due to the fact that there's the outbreak of coronavirus, we've seen that the demand for the commodity has really reduced. And China is also the second largest consumer of this commodity, so we've seen this affect prices. And on the domestic front too, we've seen that the border closure has really affected several commodities, and corn was not taken out of the mix. So the border closure has really affected the price of corn. We've seen that corn has been increasing in the domestic front, and this would persist if the border is still closed, because we know that we have a demand gap of about 300,000 metric ton, and we produce just about 11 million metric ton. And the fact that there's this demand gap, and we source for more corn from neighboring countries, and due to the fact that the land border has been closed, we'll see that the price will continue to increase if the land border still remain closed.
All right, thank you very much for your time, Toby. And Egypt's state-owned bank Maize seeks to offer up to 45% stake of its Bank of Cairo unit on the country's stock exchange within the first half of 2020. The bank's chairman says the lender is open to sell part of the state to a foreign investor during the initial public offering. He further explains that a roadshow will be taking place in the United States to sell the lender's shares. A deal to sell Bank of Cairo was cancelled in 2008 when an IPO has been postponed repeatedly within the last 3 years. Okay, let's get a quick update on today's trading activities at the Nigerian Stock Exchange. Edidion Ewan joins us now from the floor. Hello, Edidion. All right, while we wait for Edidion to come up there, a new state company set up by the Democratic Republic of Congo to manage the country's artisanal mined cobalt could seek a private partner if the state does not have the funds to purchase ore production. DRC produces about 60% of the world's cobalt. Most of that is extracted by industrial operators like Glencore and China Molybdenum, with artisanal mines accounting for about a quarter of output. DRC on Friday granted the new company a monopoly to purchase and market all cobalt that is not mined industrially in an effort to exert greater influence over prices. The new company, EGC, would be managed independently by state mining company Gicamine. All right, let's cross over now to the exchange for update on today's market activities. Hello, Edidion. Good afternoon. Well, where are the numbers at the moment, and what are the drivers, the earnings?
Hi, Chimize. Good afternoon. Well, currently the market is bearish as we speak. We're down 0.3% at this time. We've seen just about 132 million shares worth 1.5 billion naira traded so far. The banking index is down 1.4%. Consumer goods is unchanged. Insurance is down. Industrial goods is unchanged. And oil and gas is also unchanged at this time. So it's either the sectors are down or they're unchanged. So, we've seen a lot of activity. Top 4 traded stocks right now are Tier 1 lenders, FBNH, GT Bank, Zenith Bank, UBA. But traders say that the earnings that were just released is not a major driver in the market right now. Although they say that, medium, near-term earnings outlook remain poor, the market will be volatile in the near term. But they're advising investors to buy, to pick their stocks wisely and then invest with a long-term plan in view. But Chimi, just before I go, I would like to say that, as part of plans to set the ball rolling on a thriving derivatives market in Nigeria, the Securities and Exchange Commission was here earlier, and they presented a 12-page document on the rules for derivatives trading in Nigeria. The document includes terms that need to be understood by stockbrokers, regulations, requirements, listing requirements for registering. It has rules and some of the sanctions, So they're also saying they're emphasizing on education this time on the part of stockbrokers, in special investors, just so that everybody understands what derivatives are, and then they're able to, market it to investors and get people on board.
All right, let's hope that have a positive impact on the market eventually. Thank you, Eddie. And on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimezie Oku. Welcome.